You are listening to Mining Stock Education.
So we started off with 65 cents. As you said, finished at $9.40. We created $500 million of value, US dollars, for our shareholders. I'd say probably the most pride I have in what we did is that we generate, now the mine's been built, it's operational by Zijin, it generates 2% of Serbia's GDP. So when you think we started off with $10 million Canadian, and that country has 2% of its GDP from this discovery, wasn't there before. That's pretty exciting. So we're doing the same thing, Lara Exploration.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers, and in today's show, you're going to hear from a new sponsor, Lara Exploration. Its president and CEO, Simon Ingram. Simon, thank you for joining me. You're in South America. You're in Brazil at your flagship copper project. But this isn't your first time around. You were the president and CEO of Reservoir Minerals, IPO'd around 65 cents. You exited around $9.40. So you have a good pedigree, along with Miles Thompson, your chairman, Chris McIntyre, your VP of corporate dev. They were also part of that team, and they're working with Lara. So let's start the conversation there. For those that don't know, especially there's more investors coming in now that copper is over $6 a pound. Tell us the story of Reservoir and how you were able to create value for shareholders.
Sure. We followed a business model. It's called a prospect generator business model. As you probably know, Bill, exploration is pretty risky. Sometimes you could consider it kind of casino risk. And so we employed a business model to really reduce that risk right down. And it's similar to the biotech or the biochemistry business, where if you're trying to create a new drug, you come up with a great idea, but to get that all the way through trials and then get approvals, there's a huge amount of capital and money. And exploration is no different. Huge amount of money up front, lots of risk. And so we essentially do a partnership model, and to apply that partnership model, come up with the idea, pick up the exploration grant, and then bring a partner in to fund the exploration. So they take a lot of the risk. In return for that risk, they get equity in the project. And if you make a discovery, you share that benefit. The company that are funding that exploration get a slice of the project, usually a majority in the end. And as the explorer, we get a slice of that, but we've not taken the same amount of risk because we get the opportunity to look more projects with the same amount of money. And we were very successful to do that in Serbia. We went into Serbia, we picked up ground, we had Freeport as a joint venture partner, and we made the world's 13th largest copper discovery since 1990, probably the largest one in Europe for a couple of generations. And so we moved that project forward, and there's a point in time that Freeport decided that they wanted to sell that project. We had a first right of refusal, and we bought that project, and then we sold the company. So we started off with 65 cents. As you said, finished at $9.40. We created $500 million of value, US dollars, for our shareholders. I'd say probably the most pride I have in what we did is that we generate, now the mine's been built, it's operational by Zijin, it generates 2% of Serbia's GDP. So when you think we start off with $10 million Canadian, and that country has 2% of its GDP from this discovery, wasn't there before. That's pretty exciting. So we're doing the same thing. Lara Exploration, we're in Brazil. We're exploring Brazil and in Peru. We had the Lara project is an open pit copper gold project, which we're developing towards a mine. We discovered that. We're a team with a track record of discovery, not just in copper, but in this case, copper gold project. And we had a partner, Capstone. They funded into the project about $10 million. And a few years ago, they decided it probably wasn't quite a fit for them, maybe not quite big enough. They had a lot of other pressing needs, developing mines, putting them into production. So they gave the asset back, and we've been moving that forward. So we did a resource estimate 2 years ago. November last year, we put the PEA out, and it's a project which is pretty simple. It's in the perfect location, and we think it will be a mine. It produce about 36,000 tons of copper a year, process about 8 million tons of ore. In terms of value, when we did the study, so we did the study last year, we used 9,500 as a copper price, and we get a valuation about $380 million as an MPV, and an internal rate of return about 21%. If we recalculate that, and we recalculate that today, because we didn't do the pricing as high as 13, but which is $13,000 per ton for the copper price, the project's worth $1.2 billion. Same model, same inputs, everything, just change the metal price. So highly leveraged. We think we've got a market cap of about 110 million US. We're Canadian listed, TSX listed, but there's a vast gap between where we are today and where we think we're going to go as we de-risk this project and actually do a little bit more exploration as well. So it's the same story. We've done it before, and we've made a discovery. So we've seen a climb up from a similar sort of price, actually, from 60, 65 cents. 2 years ago, we were 50 cents. We're $3 now. So returned about 6 times the value to shareholders. And when you think our project has got a valuation based on our recent PEA and current copper price of over $1 billion, internal rate of return of 40% plus, and we're only 100 million. There's a fair way to go to realize value. So that's what we will continue to do. De-risk the project, take it through pre-feasibility, which means de-risk it, drill it. We need to improve the confidence of the resource. And we got some fantastic exploration around as well. We picked up a new license recently, and we're going to drill that. There's 3 kilometers now of strike of really fertile ground. And not only that, it's not about adding tons, actually. It's the trend that we have one of our pits on called Silica Cap that has a grade which is higher than our current open pit grade in the PEA. So if we discover more of this higher grade, it will go into the plant first and generate more cash, faster return, and make more money. So it's pretty exciting.
Simon, the mining business is one of the worst businesses for return on capital invested. If you look across the board, the model you're employing significantly outperforms the average by multiples. Going back to Reservoir, when you were in charge of Reservoir, what was the cash raised versus the exit point? As a corporation, what was the return on capital invested?
It's a few years ago now, so probably the number is a bit sort of best ballpark. But we raised 9.6 million when we first started the company. And then we made the discovery. We had some warrants, which we forced, brought in some more money. And then we raised another 20 something million. So we probably raised let's say it was another 30 million. So, you go create $500 million, and that's Canadian I'm talking to. So, that it's huge multiples. But this is discovery. This is world-class deposit. So, and if you look at today, if we did that in a bear market, it's a terrible market. We were drilling holes of nearly 10% copper, and people were selling our shares. It was incredible. We drill a hole, and we'd be really happy about it, release it, and then we'd see, our share price drop because people were happy that they'd made some money, and then they were cashing it in. Which you can't blame them, it's fine. But in this sort of market where there's a recognition, really in the last year that the copper is looking pretty scarce and pretty inelastic in terms of us delivering new production into the market. This is a fantastic time to A, find copper deposits, and B, develop copper deposits. And, what we've got in Brazil is hugely exciting because we're in the heart of the Carajás. So we're in a real mining jurisdiction. Huge iron ore mines owned by Vale nearby, so there's fantastic infrastructure near us. We've got some hydroelectric lines that go through the middle of the project, and it's cheap, really quite cheap energy. We only use 6 cents per kilowatt hour in our study. And then these mining towns, we've got all the skills you could imagine nearby. We're 4 kilometers from the highway, and then overlay that on open pit mining, simple metallurgy, all these things that you sort of say you like to see in a project. We've pretty much got them. And of course, we have got a little bit of experience of doing this sort of thing before.
And this is your flagship we're talking about, but you have royalties and other JV projects as well across the portfolio.
Yeah, that's really kind of a legacy of our business model, because that prospect generator business model, you do, the more projects you do, the more chance you have of success. And so we still have a number of projects there in the portfolio, which we'll move forward, looking for partners, etc., or the ones that need partners. And some of the legacy items are royalties, etc. We sold an asset last year, Fertec, an iron ore asset, for $2 million, topped up the treasury. So you'll see this business model works because you can be efficient in the use of funds. One, you're not using a lot of new funds for projects, and that means 2, you don't continue to tap investors for new money and dilute. So this company's been running for nearly 18 years. It's got 50 million shares out. It's never done a rollback, and it's never done a consolidation. I challenge you to go find a company on the TSX doing, exploration and mining with that sort of share structure. It really is a testament to the team in terms of not diluting and monetizing assets as you go along. And that's
you have zero warrants.
And no warrants.
Zero warrants.
Yeah.
And then 2.7 million incentive options, I believe I saw on the cap table,
that's
right?
Right. And that's pretty low as well by metrics and comparison. So, we're a really efficient business. Like our G&A is less than $1 million Canadian. And so it's interesting because those are the sort of metrics they're talking about, and we're really moving the company from that prospect generator to a developer because we've got an asset, we own it 100%. As I say, it's worth considerably more than our valuation. And we've got a really clear roadmap of, moving it through that development. So we're kind of moving to a different type of company now because we're a developer. It's good that we've got some skills. We've been through that process of getting to PEA, etc. And we'll bring some more skill sets in to help us on the engineering, etc. But it's hugely exciting. And we're a country that gets mining. It's amazing. So what I find quite incredible that 60% of the royalty that goes to the government comes back into the local municipality where the mining happens. So that means that people who live in these mining towns see a direct benefit from mining in terms of the local mayor has money to spend on roads, schools. The towns that we're working in, there's two big mining towns here, have received a considerable amount of money over the years, and that's translated into really quite good infrastructure locally. So, when you come to permitting, and the state's got a good track record of permitting, is Para State. We're up in the northern part of Brazil, northeast part of Brazil. Two mine the Euro copper put a mine into production last year. G Mining put a mine into production. So there's a real pedigree of in the state of permitting and encouraging new mining, and coupled with communities that see a benefit from mining tangibly. I think it's a great location to be in, and we've got other big mining complexes nearby. We're only 20 kilometers from one of Valley's big copper mines. You've got two of the huge iron ore mines with rail lines out to the coast near us as well. So the workforce here is hugely mining orientated, which again bodes very well when you want to build a new mine, because you've got a really good skilled workforce who understand mining on your doorstep, which is again not always easy to find.
In your PhD, you actually have a PhD is in economic resource evaluation. Is that correct?
Yeah, that's right. Yes, that's right. It is a bit of a joke. Know an awful lot more about a lot less, but look, it is pretty helpful to have a decent technical background. When by and large what we're doing is at the start certainly very R&D exploration. It's pretty much an R&D business, and you have to back yourself, to come up with these things. So the team, Miles and particularly Mike Bennell, are our VP exploration, a huge experience in exploration, and that counts when we're a team pretty much 4 people really, and you do need a lot of crossover of skills and deep skills and experience to make discoveries. It's not easy, and you see in copper projects particularly, we've just failed as an industry to come up with sizable copper deposits in the last 10 years. Our discovery record as an industry is pretty low, and that's translating into real concerns about future supply. And so that money won't necessarily be the only solution to this. Sometimes countries are difficult to operate in. More often than not, permitting is a big challenge too, even if you found something. So there's an inelastic supply issue to a very much growing demand for copper as we see urbanization, population growth, electrification, and now overlay the huge power demands, which really relates to copper in machine learning, AI, etc.
So the Planalto project that you're developing, how does that compare to peers over the last year? Over the last decade, the last 10 years?
It was interesting. It's some really good work by S&P. We put that in our presentation. So, we made a list. It's like top 10, 15 deposits that have been found in terms of size of copper around the world. So it's the top 10 around the world in the last 10 years, or top 15. And we're just in at the bottom. So we've got about 800,000 tons of copper in resource, and compared with the other projects. So we're just around 1 million. Used to be considered small, I would say, but that's become quite common. So not only have we got a discovery, but I think it's relevant in terms of sizing around the world. And it becomes more relevant the faster you put these things into production. So our capex is about 550 million, the capital cost to build it. For copper projects, that's bite size. And so what you see is there's more avenues to finance that, more companies to finance that. So where we fit is in that sort of mid-tier size copper, 36,000 tons of copper produced a year. So we're not necessarily bite size for the Rio Tintos and the Freeports and BHPs of the world. We're in that mid-tier. But we're also not going to take 10 years to build. This will permit pretty quickly because of the reasons I've said. The state, in Brazil has got a good permitting track record, and it's just fundamentally simple. That's what's good. Open pit mining, it's very simple. Our processing is really good. We only have one copper mineral called chalcopyrite, and you just float it. So you just crush, grind, mix it with water. You crush it to a kind of fine sand, mix it with water, put the equivalent of dish soap, washing up liquid in it, make bubbles. Special chemicals that you put in, the grains of the minerals stick to the bubbles, they float to the surface, you scoop it off. We've been doing it for over 100 years. It's a real simple process. So that helps, particularly. And it's a clean concentrate with Japanese arsenic in it. So, we have a bit of gold. It's about 95% of the economics are copper, 5% of the economics are gold. Doesn't have these deleterious elements like arsenic, which we have in the district. So the traders love it because they can mix it with dirty concentrates, reduce the penalty elements, and make money. And the smelters love it too. So this will sell very easily. It's about 28%. So that's great. So you've got simple mining, you've got simple processing. The location we're on is a cattle ranch. We actually have real cowboys on horses that round up the cattle on the ranch. Just 2 farms. Pretty extensive. It's flat area. Rainy. We're in the wet season today. We were out there this week, extremely slippery, but very accessible. I say we're only 4 kilometers from the highway. So when you sort of add these sort of things together, the chance of your project getting built when you've got wonderful infrastructure, cheap power running through your project, mining towns nearby, simple mining, simple processing. These sorts of projects get built just because you can build them easily, and the financing isn't too much. So, it's a really interesting project, and I just think we're just at the start of that sort of value creation. We've had value creation through exploration and defining how much we found in the resource. The next stage will be de-risking the project and moving it forward, through the pre-feasibility study, gaining confidence around the resource and how it's going to be mined. So this is exciting.
You mentioned you spend less than $1 million on G&A for 150 million Canadian market cap. Is that just to reiterate that's what you said?
Yeah, no, we're $100 million US market cap. We've got 50 million shares out, and we spend about just under $1 million in our G&A. Look, you can't run exploration blowing millions and millions. It just doesn't work because there's no revenue. So you either raise money from shareholders and dilute your shareholders, or you monetize assets that you found and someone will pay you more than you spent on them. If it's one or other. So if you spend your life diluting your shareholders, they give up and sell, and it's pretty hard to continue. So in the business of exploration, you need to have long money, and we've been very lucky to have shareholders who've made a lot of money in the past with us, and they've stayed with us. So we own 20% of the company as management. So we were talking about top sort of 5 things that you should consider around management. I would say, look, if management own a decent proportion of that company, they're going to manage the money like you would because they care. We care deeply about the share price. We're very concerned about how much money we spend because that is money we either raise and dilute, or we have to find from other projects that we monetize. So running an efficient company, be honest, whatever business you're in is important. But if you've got a decent stake in it, you know that management team is going to do that.
And two of your bigger shareholders that were more vocal, because the company as of right now doesn't have a large digital footprint in terms of communicating your investment value proposition. Yes. So when I researched it, Adrian Day, one of your bigger shareholders, he's been vocal and he's been a longtime shareholder. And then Rick Rule also has mentioned your company positively and featured you at his conference.
Yeah, you tend to find shareholders get hugely enthusiastic when they make money, and they tend to have quite elephant-like brains to remember that, and I think that's really quite important. So yeah, both of those guys have made money with us in the past, and I think also exploration's not a quick game, so they tend to understand management and get management over a long period of time, and so on that basis, sorry, there's a bit of background noise there in the local
You're
mining
on site
town.
for
This is what it is. We're in a shed, actually.
Yep.
But yeah, so when they make money and they spend time with you as a team, there's a trust that gets built up, which is really important, and also an understanding of your capabilities across the board. And I think our game is really risky. Exploration certainly is, and as you move projects forward, and you're quite often in quite difficult environments, politically, and some, you're out in nature. That's the business, and so, we have nearly 2 meters of rain a year where we are. Fortunately, our project's quite flat, and the water drains away. But things go wrong. That's what it is. And if you've got a good management team, they'll work their way through it and come up with a good outcome, and that won't lose shareholders money. But so having a management team, know what they're doing, been doing it, and competent and credible and trustworthy. Those are all really important things. Be honest, whatever business you do.
Simon, you have not diluted shareholders, as you pointed out, with only having 50 million shares outstanding, 53 million fully diluted after all these years. How do you plan on navigating that, not diluting shareholders or preserving shareholder value on a per-share basis? Because a lot of executives don't think of a per-share basis, but you are communicating that. How do you do that with a development project?
Yeah, and that's really interesting as we're changing the company's changing its focus from exploration, multiple assets, to now focusing on one asset and moving that forward. And actually, one of the things is actually becoming better marketers and doing, building a digital footprint where more people know who you are, and that's something we're now doing far more. When you do exploration, you really long money, you need shareholders who won't sell. When you move forward into a development company to get recognition for what you're doing, you're building value over a longer period of time against milestones such as studies, etc. And so institutionalizing the register, bringing liquidity into the register, those are all important things. And of course, raising money. Our project at the moment, we released the from the economic assessment. Our budget estimate in that was about $6 million for the next year or so of work. So that's a step up. It's an order of magnitude of sort of money that we would raise. So you want to raise that at a better share price. With $3 today, that's particularly helpful. So dilution is less painful when it's just less shares, and less shares means higher price. And I think us communicating the value of the project and the value of the journey we're on, really the value creation opportunity as you de-risk the project by drilling. It's a lot less risky than exploration, to be honest. You're improving the confidence around the resource. So infill drilling to move your resource from inferred to indicated and measured. So you've just got a better confidence around what you've got. Although we've done a lot of work already on this, we're pretty confident around our resource, I'd say. And then studies, a PEA is kind of what could it be? Pre-feasibility is what you think it might be, and a feasibility is what you're going to build. And as you go through that process, you're adding or you're improving confidence. I was going to say certainty. Certainty is still quite difficult in mining because even when you've done all your studies, certainty is still difficult. But you're improving that confidence, and so as you get through that, you're worth more as a company, especially with an asset like we've got. And I think in timing, it's just a wonderful place to be. As career sort of explorers or developers, we do this in good times and bad times. And so to have the right sort of asset in the right country and politically, location, and then be timing, at the right time in the market, those don't all come together at the right time. But in Lara's case, it has. And so we have a 100% owned asset in fantastic locations. It's a simple asset, and we're in a very strong copper market, which I personally think it's only going to strengthen just because of supply and demand dynamics. So there's lots of value still to be created within the company and around this Planalto project.
Simon, a lot of investors applying a skeptical lens will say a PEA is nothing more than a marketing document. But because you have that PhD in mineral economics, what was that interplay like between you and the engineering firm when you were talking about the variance and capex expenditures? Yeah. Could you talk that through, please?
Yeah, sure. I guess, we're kind of like scientists a bit, though we don't always wear that hat well. But look, we ask a lot of questions. And so and also as geologists, we have a lot of uncertainty in what we're doing. So we're always trying to make best use of information. And also you're trying to triangulate it down to, what's the what do you think it could be realistically? What because you're going to base your decision to spend money drilling holes on trying to get the best out of the imprecise information. And so as you move through into studies with engineering, you kind of applying the same sort of thing. So I think we spent a lot of time trying to understand how the project, what are the levers on the project? What are the fulcrum points on the project? And so we spend way more time looking at that because we can de-risk quite a lot of the project in that. And so certainly we spent a lot more time understanding costs around crushing and grinding in the plant. And then we obviously got, we have quite hard ore. About 40% of our operational cost in the plant is energy for crushing and grinding. So we wanted to understand that a lot better, if you like. So we went out and got pricing for all of the equipment that we'd use at the right sizing. So we would have a much better idea of what that would actually be delivered into Brazil. Even though we don't know precisely what that equipment necessarily looked like, but you can have a really good guess because process plants are, they're not all the same, of course, but you can have a good guess or a good educated guess on that. So things like that, understanding costs around power, for instance. So we have a quoted cost for delivering power by a local utility. It turns out that we won't bring power for the nearest town, which is 50 kilometers away. We can connect directly to the grid, become a grid user. We will only have a 4-kilometer spur from a high tension power line, which is much higher capacity than one we would normally have. But because it's so close, it's a lot cheaper, and as a grid user, we can access cheaper power as well. So there's things like that you spend, which aren't geological things at all. But as we've gone through, looking at our tailings options, etc. I'd say we've got a fairly solid PEA. So we spent a lot more time on that. Sometimes that's difficult questions for our engineers, but that's the nature of the game.
So we can make the valuation argument looking at the economics in the PEA versus your market cap. But investors and speculators are often concerned of what are the catalysts you have coming forward. So can you talk us through that, please?
I think it's a really good and important question. And we're still explorationists by heart, and we still feel that the ground is really not as exposed as it should be. So we recently announced we picked up a new license to the south of our project, contiguous with our project, but to the south, called Atlantica. And that project had a couple of drill holes in, and quite amazingly, one of the drill holes, we've got all the core back. We said this in the news release, so it's not new news. We got all the core back, we re-logged it, we re-assayed some of it as well. But one of the drill holes in the far south is exactly the same mineralization as we see in our southernmost pit called Silica Cap. In between is 3 kilometers. And so we then went on the ground, we did some more exploration in terms of soil geochemistry. In our case, copper on surface in the soil is a very good indicator of copper in the ground. And so we've got some great anomalies there, good vectors, and it's on a contact between granites and volcanics. So we've got a great 3 kilometers length to go and test. And the other good positive thing about this area is that the silica cap pit, which is our southernmost pit, has the highest grade in the deposit. So if we can be successful in exploration along this trend, and the grades are as high as they were in silica cap, all of that will go in the plant first, because it will generate more cash, make the project even more economic, irrespective that we increase the mine life, etc. So for Catalyst, that's pretty exciting moving forward, and we'll put the rig on imminently and be drilling that. So there's kind of some good news that will come from that, I hope, and we're pretty confidence, a dangerous word to use when we're talking about exploration, but we're excited to be on that. And then, of course, as we move forward on various studies, we'd like to infill drill our resource, build resource confidence by having more information. That will require a little bit more money. We've got 3.5 million in treasury, so we're looking at how we add to the treasury. And again, we've done partnerships, we've done joint ventures, we've done a lot of different things, and possibly raise money. We've got a fairly active data room, so there's quite a few companies and financiers of different colours looking at our project, which we do as a course of business anyway. We're used to joint ventures and partnering projects. So we see how we raise some money, so there's catalysts to how the project moves forward, how the project de-risks, and what else do we find on the license area. So there's some quite interesting catalysts, and all that in the backdrop of people wondering where they're going to get the copper for the next 10 years and being a little bit nervous of that. And so that will drive price pressure in copper, which we've seen certainly in the producers. Their share prices have risen hugely. We've been very late to that, and probably you highlighting that our digital footprint isn't very big, maybe that not enough people know who we are, and really the opportunity we have over the next years or two.
Well, the company is a new show sponsor. We'll be covering their progress over the upcoming year. Lara Exploration.com is the website, and the ticker symbol on the venture in Toronto is LRA, and also on the OTC. For United States listeners that can't trade international, you can find it under the ticker LRAXF on the OTC. Simon, thank you for this update, and I look forward to follow-up interviews with you.
Yeah, thanks so much, Bill, for having me.